Hello, you're watching Roundtable. Cryptocurrencies have been rocked by a $2 trillion crash, and even the best-known token, Bitcoin, has stumbled. Some market watchers fear there's a lot further to fall. While these fluctuations in the price of cryptocurrencies could threaten the stability of the world's financial systems, that's a warning, at a time when many are struggling to recover from the economic turmoil caused by the pandemic. What is behind this year's crypto crash? Good to have you along. I'm David Foster. As inflation soars, central banks, or at least some of them, raising interest rates, further exacerbating the cost of living crisis, and stock markets, well, they are wobbling too. Cryptocurrencies, no exception, despite the belief of some of its advocates that it could be a store of wealth in rocky times. Well, trouble is brewing for one country that adopted Bitcoin as legal tender. El Salvador has seen its holdings of Bitcoin slump, value losing $56 million, according to Bloomberg. While it may not seem like much, cash-strapped El Salvador is in the midst of a debt crisis. Its debt was downgraded to the same level as Ukraine and serial defaulter Argentina. So there are serious consequences of Bitcoin's collapse, and many influencers are feeling the anger of their followers for the losses that they've made. Let's get talking money, at least virtual money. With us in London, we have both Max Engelen, the head of sales at CryptoCompare, and Vicky Pryce, chief economic advisor to the Center for Economics and Business Research. We go to Los Angeles on the west coast of the US, where we have Brad Yasar, the founder of Beyond Enterprises, an advisory firm focusing on cryptocurrencies, blockchain, and token-powered organizations, all of which would have been meaningless, Brad, to people 10, 15 years ago. All of those words I just read out, things really have changed, haven't they? Are we, with the collapse of cryptocurrencies, seeing the world's financial systems severely threatened, do you think, Brad?
Well, I mean, we have to define collapse first, because the crypto, since its birth with Bitcoin, has had a cyclical nature. We always had cycles, and they're very volatile cycles. So there are high highs and low lows. So if you look at this year, I mean, it's another bear cycle that we're in, but it's also reflected in the traditional markets. So it's not just crypto assets and the crypto markets crashing, but also traditional stocks, technology stocks, so on and so forth.
Let's take a look at this year. You mentioned the big fall of Bitcoin in particular. Let's take a look at it. January, round about $70,000. May drops by 40%. July drops by 60%, down to $23,600 a coin. From that high of 68,000. Well, that's still pretty good considering where it all started. So it's grown phenomenally, Brad, hasn't it?
Absolutely. I mean, if one had the foresight to hold Bitcoin for at least 4 years, there hasn't been a period where someone who bought Bitcoin 4 years ago had a loss. So it's grown phenomenally, and I believe it's going to continue to grow.
But why all this talk, Vicky, then, of the fact that we're teetering, if you like, on the brink of some kind of terrible recession thanks to cryptocurrencies? As Brad says, it's a bit of this and a bit of that, a bit of everything, isn't it?
I don't think it is thanks to cryptocurrencies at all. We are teetering at the sort of verge possibility of a recession, or if we're lucky, just stagflation in the world economy, and stocks have been coming down very significantly. And cryptocurrencies, of course, have fallen alongside the rest, if you like, in some cases faster than stocks. Of course, they have reacted to the fact that we are indeed in an environment of higher inflation, higher interest rates, and more interest rate increases to come. And people are much less inclined to take financial risks right now. So they're trying to withdraw some of the money that they had put into cryptocurrencies, with some disastrous results, depending on what type of currency they had bought, or what hedge fund or other that was specializing in this has gone down recently. So we do have that element of it. But the truth is that now, in particular, with the cryptocurrencies overall, I think the value of them being something like, just under 1 trillion. If you look at the overall stocks across the world, the value is around 100 trillion. So it's just 1% of the market, and that's very small. So we mustn't blame the cryptocurrency changes for what's going on in our financial markets more generally.
Okay, Max, let me ask you, bring you into the conversation. If it is only, as Vicky suggests, like 1% of the global financial market, who stands to lose? What type of investor stands to lose if this downward trend continues?
Well, it's your high street retail investor or tech investor or like Robinhood investor or TikTok, fairly young, but we have seen an incredible rise in institutional adoption in the last 4 years. I think I was last on the show in 2017, and since then the price has gone from 4,000 to 68 or 69,000, and we're currently at around 20,000. So, we've come a long way in a fairly short period of time. But I do think this is, as the first guest mentioned, it goes in cycles, and particularly 4-year cycles, because every 4 years it becomes harder to create Bitcoins and requires more energy to create them. But in the last 3 or 4 years, we've now become almost like a macro asset, where we are correlated to the NASDAQ and to the S&P 500 incredibly closely. So I think Bitcoin might go away from these 4-year cycles and start trending towards a macro cycle. And the stock market's been in a 10-year bull run with a little bit of a pullback in March 2020. So I guess
can I stop you for a second, because I'm pretty ignorant on this. You say it takes a lot more time, energy, whatever these days to create a Bitcoin.
Sure.
Nobody ever handles a Bitcoin, do they? Say, what are they creating?
Yes. So there's an algorithm that releases a certain amount of Bitcoin into the general public. The way that you release them is by using computer power to basically do really hard algorithms. And basically, if you finish an algorithm, you are rewarded with a Bitcoin. So there's called miners, which are just large groups of computers run by people or companies that are putting a huge amount of power into the system, and then they get rewarded in Bitcoin. But the algorithm is developed in a way that every 4 years, it becomes harder to create more Bitcoins. You need to have more energy, and you get less of a reward when the Bitcoins are given because of your mining. This is perfectly built, to create scarcity. And think about it as like gold mining. As the mine becomes complete or finished, it becomes harder and harder to get the gold out of the mine. So it's similar to that.
Okay, Vicky, and then I'll come back to you, Brad, in just a moment. Chief Executive of the Financial Conduct Authority, Nikhil Rathi, says, as we have consistently warned, if you invest in crypto, you need to be prepared to lose all your money. These days, are you daft if you do it?
Well, the truth is that indeed Bitcoin or any other isn't necessarily, although it's done quite well, Bitcoin particularly, except for what's been going on recently and at various times that we just discussed. But overall, it's not really like any traditional currency, a store of value. You can't guarantee how it's going to move. It's not really a means of exchange because you don't use it normally for many transactions. There are some transactions you can use Bitcoin for, and people have increasingly done so, but it's limited. And it's also not a unit of account because it just loses a lot of its value at various stages. So it doesn't really act like a proper currency. And that's the concern that people have about it being possibly ephemeral, if you like. It might disappear. But I do agree that Bitcoin in particular has a scarcity value, and that may sustain it over the long term. But behind all this, what we really must bear in mind is that what this has all done, it has encouraged the thinking and the development of systems that allow for possible transfer of money and payment, which doesn't use intermediaries, which is cheaper, is more efficient, crosses countries more easily. So there is the whole area behind it, which is actually valuable. And we must sort of look at the cryptocurrency development as having contributed something about possibly in the longer term improving the efficiency of transmission of the financial system overall and cutting costs to consumers.
Well, look, I'll come back to you, Vicky, and you can tell me what transactions can now be done that perhaps couldn't be done before. And the same with you, Max, because I know that you believe that eventually it will be nothing but cryptocurrencies. But I promised to get Brad back in at this particular point. For those people that haven't invested in any kind of cryptocurrencies, is there a need to be concerned as you watch the value of these cryptos? They've got other names as well, I think, but as you watch them falling, should I be worried? I don't have any.
Well, I mean, should you be worried if your portfolio is going down and you have immediate needs? Maybe. I mean, all the time, regardless of the asset, and especially for cryptocurrencies, you should do your homework and only invest amounts that you can lose. I mean, this is for all the stock investments, bond investments, everything comes with this warning. Please do not invest money that you cannot lose.
Sorry, I think you may have missed the point of my question. I don't have any money in this, but are the wider ramifications of these cryptocurrencies losing money something that is likely to affect me and the hundreds of millions of others who aren't directly involved?
Yeah, I mean, I think just like we were discussing, there is an inherent improvement to financial systems with cryptocurrencies. So if all of them were to fail, then that wouldn't move us forward. That would set us back from a money transmission, value store perspectives. But if you haven't invested anything and you're not looking to invest in cryptocurrencies, although this would be a really good time to get in, then you should not have any worries that it's going to directly impact your life. No.
Max, what do they say? I mean, we're just hearing from Brad. Now's a pretty good time to invest. You're not a financial advisor, not asking for this, but I've heard it said in financial markets before, when something goes down, don't do this, because what do they say? Never try to catch a falling knife.
Yeah, but what they do say as well is, sell when there's greed and buy when there's fear. And you don't necessarily have to go stick a large amount in. You can start dollar cost averaging now, which is when you start putting X amount away, maybe daily, weekly, or monthly. To the last guest's point, this is an incredibly good time to start contributing to a Bitcoin portfolio. We typically do see 80% drawdowns, so we could possibly come down as low as 14,000 before we do start a new trend up. But you know what, if you're willing to hold it for a while, this is a great time to start thinking about adding. Again, as you said, not financial advice, but it's better than buying it at 68, 69,000.
Vicky, what about these countries that actually put their own fortunes into cryptocurrencies? You can probably give me a couple of examples, but I was reading about El Salvador, not the most stable country. Is it causing problems for a nation as a whole?
It depends what you mean by causing problems. If your currency is devaluing very significantly and you think that perhaps a cryptocurrency is going to be a better bet and it's going to keep its value better than what you've got, then maybe you'll do that. And if you have no trust in your currency, you may not want to even accept it as payment. You may indeed prefer to have cryptocurrency instead, and that's indeed been happening in a number of places. And that trend might, of course, continue because we're seeing right now we're in the middle of a situation where there is a lot of inflation in various countries and defaults are beginning to increase. So we are in a very precarious situation following the war in Ukraine. So that's one thing. The other one, though, on the other side, is whether, just thinking about this investment, you can really cover yourself for a lot of fraud that seems to be happening. And there is actually a concern here in the UK, and I'm sure elsewhere as too, of the amount of money that retail investors of the type we were discussing have lost in the last few months because various investments that they have made have been basically done by fraudulent agents, and some areas where they have invested have collapsed completely. So that's one of the issues that you need to have against it, because of course a normal currency has the central bank behind it. So it's there as a lender of last resort. It's there to support failures of banks. up to a certain amount, of course, but it's also, of course, looking, or that's what central banks are doing right now, to take some of that risk out by introducing their own central bank digital currencies. There's still lots of complications on how that will develop, but it is, in fact, one element of what governments are trying to do to counter, if you like, some of the concerns they have about regulating.
Are you thinking about big currencies, big reserves? Well, let's pick where I'm sitting at the moment, where you are, in London, the Bank of England. Are we talking about the Federal Reserve in the United States? Are they hedging their bets with these cryptos?
Well, they're not exactly hedging the bets. For the moment, they're allowing them to happen, but they're looking at regulating them more strictly, because for the moment, they're not really regulated. But what they're also thinking is whether there should be a central bank digital currency, which has some of those benefits of cutting out the intermediary, if you like, makes it more efficient. And basically, it's like, at the end of the day, paying electronically for anything that you want to buy. But it is a currency that you can completely trust because it's backed by the government, if you like. There are serious concerns about that. There is a consultative document which the Bank of England has produced, which or is producing for this year, which is going out, or in fact has already received some responses, but they're producing a proper consultation document this year, which they think might then allow for a development phase, which will last quite a few years. So while that happens, we're still going to have quite a lot of the cryptocurrencies around, but they may be more tightly regulated in the process.
I'm wondering whether tighter regulation would help the two men we're about to hear from who invested, I don't actually know how much, but put some of their money into cryptocurrencies, most likely, I think, from reading the stuff, into Bitcoin. And that just happens to be in El Salvador.
I think that's what's happening in the country, that the price of Bitcoin has collapsed for the moment, and that there's not enough confidence to bring the currency back to its strength, or to trust in Bitcoin.
I have come to the ATM to withdraw my bitcoins because I know it continues to crash and that cryptocurrency does not guarantee me anything. My official currency at the moment is the dollar.
Brad, is there any reason for these people to have, as Max was suggesting, the nerve or the confidence to say, let's wait, it's going to go down, and then it's going to go up again? Or would they be wise to pull out?
Well, again, it's individual circumstances. If they can wait comfortably and not need that money immediately for their everyday lives, I think it would be wise to wait. I mean, selling an asset that has lost value only realizes losses. It doesn't help anyone.
But it all depends how much you paid for it in the first place, doesn't it?
Absolutely. And if you're in a situation where you need the value to be available and not go down today, then that's not a good position to be in, because yes, they do need to liquidate probably and try to lock in the value. But again, to the point of national currencies devaluing faster than crypto in some countries, it may not be as easy. And in El Salvador's case, they don't even have their own national currency. They use US dollars. So depending on how fast US dollar is devaluing, it may not be that beneficial to just get out of Bitcoin and go into fiat currency.
Can we kick this one around between all three of you? I'll stay with you for the moment, Brad. Warren Buffett, well known as one of the shrewdest investors over the last 25, 30 years, probably more. Berkshire Hathaway, quoted as saying, I wouldn't pay $25 for all the Bitcoin in the world.
Yes, and he also said that he's been a very, very poor technology investor. Warren Buffett is a legend in value investing and finding businesses that he can extract the most value out of, like insurance. He has never had any success with any technology investment, and he hasn't done any. So that's a very wise thing to say. I personally invest in technology. I wouldn't know how to invest in an insurance company or where the value is if one opportunity presented itself. I wouldn't diss insurance companies just because I don't understand that, but that's a different conversation. I think it's wise to invest in things you understand. And Warren Buffett and Berkshire Hathaway have not been technology investors.
Okay, so he's not actually rubbishing it. He's basically saying, I don't get it. Max, you've said the fundamentals are strong. It's solid. Explain that if you would. But you've also called it funny money. How long before people generally don't regard it as such?
No, I don't believe it's funny money. I think that's what a lot of people have thought of it since its creation, right? Because you can't see it, you can't touch it, you can't feel it. But quickly before I go on that, in terms of Warren Buffett, he's actually got quite a lot of exposure to Bitcoin indirectly. He's got a big stake in Aon, who provide a lot of insurance products for crypto exchanges. And also, he has got quite a big stake in the largest Brazilian digital asset exchange. So fair enough that he doesn't want to directly buy it because he doesn't understand it. And I think that's one of his quotes. You know, if you don't understand it, don't buy it. In terms of your question, funny money, again, I don't think it's funny money. The fundamentals, I mean, is that amount of new people that are on the network. So creation of new wallets has pretty much never been higher. The amount of value that's been settled across the Bitcoin blockchain over the last 6 months is incredibly high. The highest over 2 quarters ever. But one main statistic that is a little bit worrying is that right now, we're at our highest realized losses for Bitcoin holders, meaning that basically the hodlers, what we call in crypto is hold on for dear life sort of approach, is slowly but surely waning away for some of these people because of the other contagion across tech, inflation and all that good stuff. But ultimately, Bitcoin is just as strong as it was before. It's just in a really uncertain macroeconomic outlook right now.
Okay, I understand quite a lot more now than I did at the beginning of the program, and when you came on before, Max, I understood a little bit more then, but I still don't really get it. So, Vicky, perhaps you can help me here. Can you compare what we're seeing here in terms of an international trading token, if you like, that's surprising people and it's new and perhaps they're a little wary of, to anything that we've seen in the past, whether that be 100 years ago, 200 years ago? When was the last revolution in terms of currency that we could equate this with?
Okay, well, the one thing that I would say is that it was the liberalization of capital markets. So you can, in fact, use a currency to buy something from across the world without having capital controls or any other restrictions. Of course, there's still an exchange rate change that needs to be made at times. But of course, in Europe, we have the euro, so you can do it without any extra costs in terms of buying across. And this is really what it's giving you. However, the cryptocurrency, in addition, cuts out the intermediaries, which is quite a change. You don't actually have that in any other bit of the financial market, if you like. And that's the one revolution. And of course, you have the blockchain behind it, which makes sure that all these transactions are properly calculated. So it is quite an interesting technical revolution. You could also argue that there's something similar going on with the internet, being able to use it to access things all across the world of the sort that you simply couldn't do before, and can use it without really any extra serious cost. All those things that I mentioned before, of course, don't have exactly the same risk that crypto has. And one of the issues, yes, I heard what the others were saying about individuals can make a decision and perhaps hold their nerve and maybe they know some of the risks. But if you have problems like a crypto exchange perhaps ceasing to operate because everyone is withdrawing the money from it or wants to, or even crypto lenders in difficulty, then your investment might just disappear without you having really done anything about this at all. The sort of thing that can happen, of course, with other types of funds, investment funds, which
you've got to be very, very careful.
Stop. Yeah,
indeed. Yeah. Quick thought, Brad. We're running out of time. Where's it going now? It's not going away, is it?
Nope, it's not going away. And just to add to the previous topic, we should also not forget the bank runs a couple decades ago, and a lot of banks going out of business and people losing a lot of money just because they had their money in the bank and the government only covered a small portion of it. But as far as the future of Bitcoin and crypto, I think after this bear cycle, it's going to do the same thing it's done after all bear cycles and really start growing and just like Max had said, there are a lot of institutional players now. So every cycle we add more and more anchor holders and investors and entrepreneurs into the ecosystem. More people understand it, more people want to work with it and build new things. Maybe not buy Bitcoin and hold it or invest in it, but take the blockchain technology, take the distributed models and use those to build something. So I see it being the future of banking and finance.
Okay, listen, thank you very, very much indeed. Of course, what some people may be worried about is that at least with what they would see as real money, not the funny money, you can put it under your bed in a tea chest if you want. Maybe one day you'll be able to do that with Bitcoin, but not at the moment. Listen, thank you for coming on the program. Thank you for watching it. We'll be back pretty soon from me, David Foster. Goodbye.